Hello, I'm Donald Leggett, and welcome to the latest Focus IR CEO interview. I'm joined by Sean Heathcote. He's the CEO at Neo Energy. Neo is a South African-focused uranium explorer, which has just completed a reverse takeover and listing on the London main market. Welcome, Sean. So, how would you summarise Neo for those less familiar with your journey?
Neo Energy Metals is essentially a near-term uranium explorer and producer. We're looking to get to the market with uranium production sometime in the next 2 to 3 years. Essentially, like you say, we're reversing into a shell on the London Stock Exchange and looking to drive access to the uranium market, that directly exploration uranium market for the exchange.
Now, there are lots of miners with a London main market listing. But I think you're the first, I think I'm right in saying you're the first uranium explorer. So why the London main market? But more importantly to me, why do you believe, why uranium and why now?
Yeah, obviously you said get onto the London market. I mean, and that's key to us. It will be the only dedicated, pure uranium exploration play on the market. And why uranium and why now? I mean, I've been in uranium now for 20 odd years. I was involved in the Kayelekera project, the Henre project, Race-Kale Bakuma, all African uranium projects. So it's not a question of now, it's a question of continuing what I've been doing for some time. And this particular transaction we've been working on since the back end of 2021. So again, it's not necessarily now. We're just getting it to the market now, and it just happens to be at the perfect time for where the uranium market sits. It's been in the doldrums since about 2008, with a very low uranium price, and obviously with nuclear becoming the forefront of baseload energy of the future and move away from fossil fuels. There's a lot of interest in uranium, and there's a lot of growth in nuclear power plants, particularly in Asia. So we see the demand, and in fact, all the experts see the demand for uranium growing by 50% by 2050. So from our perspective, it's a market that we see that there's a key growth potential for. And obviously with the uranium price moving off from $18 a pound, historically we're now over $74 a pound, which allows a lot of the historical producers that are part of their production to get back into the marketplace. So it's a great time for uranium.
Okay, So you think you're in a good spot in terms of the uranium cycle, but are you one of those people who actually believe in a uranium super cycle? Do you think this next decade is going to be the golden time, the best time uranium has ever had?
I don't like to use the word super cycle. Others may do that. From the perspective of where supply and demand for uranium sits, there is going to be a shortfall come 2028 onwards to 2029, and you can see there's going to be a gap in the market, and that is obviously going to drive the price up, and it's going to bring a lot of new players into the market, and that's demand driven. It's not sort of hypothetical, theoretical. It is real physical demand for a product that gets used. So yes, I'm a firm believer that the market is going to stay where it is, if not go a little bit higher, hopefully a little bit higher. But I don't think the market needs to go too much higher than where it is now to sustain the supply going forward.
Okay. The flagship project is the Henkries Uranium project in the Northern Cape. I hope I've pronounced that correctly. So tell us the Henkries backstory. What has already been developed on the ground there, and what capex savings does that bring you?
Okay, yeah, the Henkries deposit was discovered in the late 70s by Anglo-American. They spent millions during the period of 1976 to 1978. They drilled 12,000 meters worth of holes on the deposit, over 200 test pits, 6 months worth of pilot plants on both acid and alkali leach. Huge amount of time and effort went into it, and completed a feasibility study for that period. Then 3 Mile Island hit, the bottom fell out of the uranium market. The deposit was then picked up again by the Henkries Uranium, who did some additional work, another 6,000 meters of drilling. And then obviously it was picked up by DST, who we have taken the shareholding of the deposit away from them. So there's somewhere in the region of 18,000 meters of drilling, a full feasibility study, all the technical data that goes with it. In terms of the capex, I would hate to say what the capex is now from a 1978 feasibility study when it was the US dollar was on parity with the rand. I don't want to put that into the marketplace. All I can say is our deposit is very close to that you would find for Aura Energy, their tourist project in Mauritania. They've got a capex that's fairly well defined for that. Our deposit is at surface like theirs. It's 5 to 8 meters below surface. Free dig, no drilling, no blasting. The differences for ourselves is we've got access to water, power, and road infrastructure at site. So our capex should be less than what theirs is, along with a lower OPEX. So we're hoping that we'll get a similar sort of return. But the first thing we're going to do is do a preliminary economic assessment on the deposit, and then obviously complete the feasibility study, and the outputs of that will then release to the market.
Okay, so those are your next steps. Let me ask you, just if those are the next steps, what are the challenges that you think you're going to have to face over the next 2 to 3 years? As I think you're targeting production by, what is it, 27, 28?
Yeah, ideally for us, in terms of what we'll be looking to do, is complete the feasibility study, which will take us probably 12 months, there or thereabouts, including the environmental impact assessment, and then obviously look at the financing, and then get into the sort of mine build, should we say. So we're looking at 2 to 3 years from now is where we're looking to get in production and obviously ramp up. And that, from our perspective, is the target. In terms of challenges, obviously Eskom has challenges in South Africa.
Eskom are the national electricity supplier.
That's correct.
Yes?
Yeah, they're national. I mean, there are challenges in terms of availability of power in South Africa at the minute. And one of the key things we would do is look at a sustainable, renewable energy source to drive the mine going forward and close the loop and make the mine as absolutely sustainable as possible in every aspect that we can, and that will form focus of the design. So that's obviously a challenge. Meeting the requirements of the local community. It is in a desert, arid area, but it's a very impoverished area as well. So obviously we need to make sure that we bring them into what we're going to do to develop the mine going forward.
Yeah, bring some positive ESG into the project.
Absolutely, and that's the core of what we would look to focus on in the design phase, not just from when we hit production and when we're actually moving forward. Let's design that in from the get-go.
That makes a lot of sense. And what type of mine are you actually going to planning to build? Is it an open cast mine? Tell us all.
Yes, it's an open cast mine. Obviously, we said it's anywhere from surface, the deposit occurs at surface, down to a maximum depth of about 15 meters. The bulk of it is 3 to 8 meters below surface in sand. So literally, it's bulldoze the topsoil or the top sand off the top of the deposit, and it's very easy to see where the mineralization starts. It turns black. So you move from sand to black soil, then to a green soil, then back to sand. So it's almost impossible to confuse what is waste material with the mineralization. Take that, obviously put it into either a slurrying system or we truck it to a processing plant. It's going to be a simple acid leach modular type processing operation, and move it forward from there. There is nothing complex about this deposit or how we're going to process it.
No, it all sounds quite low capex as well. I'm interested to hear you say that the Anglo feasibility study is from the 70s and there's not so much you think you can incorporate. But presumably there must be some benefits of having a feasibility study having already been completed.
Oh, absolutely. What it says is that it doesn't matter where we sit going forward. I mean, we have a feasible mine. And at that stage, when the uranium price was half what it is now, and the rand costs were about 15 times what they are now, in terms of US dollar comparatives, it was still feasible. So from our perspective, we know we've got a feasible mine and we know there's a net positive cash flow just with the ore deposit that we've got now. But obviously the important thing for us, it's a fairly small deposit. What we want to do is increase the size of the deposit, do more drilling, and obviously drive down the impact of capex on the overall feasibility of the operations.
Okay, and let me talk you downstream. Where might your output go to be processed? Is there actually processing in South Africa, Sean? And if not, then where might it go? And then where globally, where might the end output end up? Will it be America? I mean, there's many people who use uranium.
Yeah, the key thing about uranium, it's that it's the most tightly controlled commodity on the planet. It's what's called a Class 7 material. If a drum of yellow cake falls over, it's considered a nuclear incident. So really, it's very, very tightly controlled, and there's a lot of procedures around how you actually move it around. In essence, the bulk of all yellow cake globally goes to, I think there's 10 conversion and enrichment facilities around the globe, from locations in North America, in Europe, and in Asia. So all of it goes to those facilities. There's no local processing capacity in South Africa. And in order to look at that, it's a very, very capex intensive investment to actually look at putting that processing capacity in place. So the bulk of it goes into those conversion facilities, and it's a very long cycle between sort of being at the end of the mine to before you get fuel rods or fuel pellets. That is about 2 years before any mine output actually reaches a nuclear reactor. So it is going to be out of South Africa, but they obviously have 2 nuclear power plants already at Koeberg, and they plan to build more. I think there's 5 or 6 SMRs, small modular reactors, that are being planned to be built in South Africa. So they will need nuclear fuel sources. I think they currently get it from France, but there's various other suppliers of the nuclear fuel sources around the world.
That's a very interesting answer, Sean. Now, South Africa is a serious mining jurisdiction. I'm told that you have a serious mining background. So why don't you tell us a little bit about yourself?
Raised in the UK, educated in the UK, up in Derbyshire, where there is actually a little town called Heathcote, and that's where the family is based. Educated at Royal School of Mines and spent a few years here working for Billiton, and then was headhunted to run operations for Anglo in South Africa, where I spent 26 years, was home in South Africa, working for various project management and construction companies, all in the mining sector. Lived in 10 different countries, worked on 100+ mining projects, 4 of which were uranium, including Langer Heinrich, Kayelekera, Bakuma, Racecale. So a lot of uranium experience in terms of how to process uranium and how to work and develop mines in Africa.
You have a significant cornerstone investor in a body called Global Commodities. Now, I'm not familiar with Q. Could you explain who they are and who backs Q and why it's a really good thing to have them as a cornerstone investor?
Yeah, absolutely. Global Commodities is owned and operated by Quinton van der Berg, who's a major sort of South African entrepreneur, private entrepreneur in terms of his mining operations. Over 40 different mining operations in Southern Africa, from coal to lithium to copper. There's a lot of philanthropic work, and very committed to the development of the South African community, a devout South African. And key to us is the fact that he's just raised $1 billion in the Middle East for energy transition projects. And obviously a portion of that comes to ourselves in terms of underwriting pretty much our whole investment in putting the feasibility study forward for the Henkries project. And he's sort of very keen on near surface deposits, and the fact that it was so shallow and we're so close to getting the production, it was just an obvious step for him to take a stake in the business and drive us forward. And he'll be joining the board post-listing. And obviously, putting £3.5 million into an entity, he wants to make sure that his money is spent in the right fashion.
Okay. My final question, Sean: why should people invest in Neo Energy, and what's the potential going forward? You've already told me you're not a great believer in the super cycle, but you don't necessarily have to have a super cycle for this project to be eminently profitable. That's what you basically explained to us.
If the super cycle happens, I think it's great for everybody. But the super cycle doesn't need to happen in order to make sure that there's enough uranium for the nuclear projects going forward. So from our perspective, the differentiators for Henkries is that we've got an existing JORC resource. It's well defined. There's a positive feasibility study that's already been completed. We're going to increase the size of that deposit over the course of the next 12 to 18 months. We're going to update that feasibility study, apply for the mining right, and get into production in the next 3 years. So a lot of the uranium exploration companies and development companies have got a much longer cycle than what we've got. And a lot of them have been in the market for 9, 10, 12 years. And they still haven't got into production. So from our perspective, we're a near-term producer in what we're going to be putting to the market and to the table. Also, we're looking at optioning or the optionality of existing prospecting rights that are also adjacent to us and growing what we see as a very prospective uranium jurisdiction in and around the Northern Cape. There's a lot of activity in the Northern Cape. We've got Hamsburg, zinc and lead mine that's only 30 kilometers from us. Orion with the Prieska copper operations are about 60 kilometers from us. There's Blesberg lithium and tantalum mine, in which Quinton's got an existing investment as well, so we can look at consolidating infrastructure investment around those two operations. So there's a strong community of mining and a history of mining in the Northern Cape that we're going to leverage it off to move into production quickly.
Sean Heathcote, thank you very much for joining us today. Sean is the CEO at Neo Energy. That was fascinating. Thank you so much. For more company information on Neo Energy, please go to the Neo Energy pages of London South East and think about adding Neo to your watch list. Meanwhile, do follow us on Twitter. That would be @_FocusIR_, or alternatively @London South East. All that remains for me to do is to say thank you very much indeed for watching. Thank you.